Looks like we've got 4 people here so far. We're going to give it a few minutes, guys. Just want to make sure that we have some people here. Good morning, Jill. Good morning, JK. How are you? Happy holidays. Good morning, Adam. How are you? Morning, Joe. Looks like there's some others that are out there being quiet. Good morning to all of you that aren't texting or anything in the chat box. I made it half alive, Matthew. Right on. I'm a little worn out myself. It's been like you know how the holidays get. It's nonstop, right? You're working in the market, you're taking care of friends, family, yourself, whatever. Good evening, JK. JK, are you in Australia? Are you the guy that's in Australia? Morning, Patrick. Morning, Matthew. Charlie. Euro Boomer. Morning, X. Morning, Eric. Yeah, it's cold. It's cold this morning. We had a little bit of an ice and a snowstorm yesterday. Morning, Bill. Morning. Hey, Bill. Good to see you, my man. If you can hear my voice, Bill. I've been talking to Bill since when I first started that Twitter account. How's your dog doing, Bill? Good morning, Little Big Bear. Good morning, JK. Yeah, Sweden, actually, right on. Yeah, I got a buddy that I talked to who's living in Amsterdam right now. He said things are tough with the lockdowns over there. Sweden. Lucky, lucky. All right, Little Big Bear. Yeah, it's been weird trying to. I've asked my wife to help me with not like trying to figure out who people are because you like see your regular name, but I'm not tying it to your Twitter name. I gave like a list of shout outs the other day, so I hope that you guys can hear you guys are hearing me call you out without, letting everyone know who you are so you can keep your anonymity on the internet, which is always a good thing. Don't be listening to people tell you that it's good to be giving up your anonymity on the internet. Good morning, Betty Mac. Alfie, right on. Yeah, so, it's interesting. I was in a Discord where there were rumors floating around that because of lockdowns or new lockdowns that all the big bank traders were ready to trade at a moment's notice over the Christmas into New Year's holiday in case the market crashed. Of course, the rumor started from one of the biggest bears out there. Happy Sunday, Troy. Alex, good morning. Yeah, we could do that right now. Let's start with Alex's or Andy's. Alex, let's start with Andy's tweet if you want before we get into anything. We can briefly talk about that. We could get that started so that people can go back and review it later. So Andy Constant put out a tweet about a topic that is sometimes difficult to understand. We'll switch over real quick and I'll show this to you. So, and I'm gonna try to make this simple, okay? So every quarter, let's bring this back down to September. It's actually pretty good right here. So this is OPEX, right? This is OPEX right here, back in September. And you have to plan for your quarter. You plan for your monthly OPEXs, and then you plan for your yearly outlook, right? plan for your quarterly OPEXs. And you all know that the biggest trader out there are the dealer, well, they'll say like dealers, brokers, market makers, right? Market makers is the biggest out there. Well, like basically the biggest trader out there. And then you've got dealers, brokers, you've got these big banks, you've got GS and JPM, some smaller players, MS, and whatever. And you've got these like billionaires, like, or trillionaires, I guess, right? Billionaire, trillionaires out there, like, who's one of them? I'm always making fun of him on Twitter. Icahn, Carl Icahn's a big provider of liquidity in the market. Morning, Ted. So you've got these guys out there. You got these, very rich, very powerful people that provide liquidity to banks and smaller banks, the big market players. And every year, every quarter, they're providing liquidity, basically, right? And so let's say we're back here in September. I think this is the 21st of September, right? And we're looking towards, you got the dot plot for the Fed. You've got all this, you got end of year. You've got this trade that's wrapping up for the COVID trade, right? The 2-year COVID trade from March of 2020, or whatever, however long that is. And you know that rates are possibly coming. You know that the ramping up of tapering is possibly coming. You have all these unknowns. Even though people know things, you're like, oh, JPM, or excuse me, JPOW is a friend of the banks. Banks they're not friends. They work together sometimes they don't. But and there's always powerful people trying to take each other's money too. We know this from past history. So at any rate, when you're planning out, they're planning out this month right here. You'll always hear about selling calls and buying puts, right? So being delta neutral, hedging, and as you're heading into some unknown events coming up in the future, and you're at a certain point, and you want to start hedging, you'll end up selling calls above, right? And you'll buy hedging puts below. And they did it actually back here. This is actually when it really started heavy. It ended up starting here on November 5th. There was some massive hedging put on the market. And so at the same time, or anyways, when they started to hedge over here, these big banks, they hedged down below. And they sold calls above, right? And there's, they're selling these calls. You've got big money putting the money up to create these tools, I guess. And these printed down below here, right? So you've got all these, you bought these cheap puts that are way down here. And this is what this guy's talking about in basic terms is these hedges ended up printing down here at 445 or 4,500 basically. And no more hedging came in down below. And that was part of his point, was that this can go either way. Is let's say we're down below here and you see another wave of heavy hedging down below. And these big banks like JPM, when they're buying these hedges and they're selling calls up here, right? And you have to understand how rich these banks are. These banks want to, hang tight for just a second. These banks want to make money on their hedges, and they want to make money on calls, right? So if they're gonna hedge, they're gonna call hedge too. And so when they're down here and they get this print down here, let's say JPM was the one that did it, and now they want to take the upside, they'll end up hedging above. And so they're always buying, like how I trade, they're always taking the other side of the, not always, but one thing they're looking for down here is if there's more hedging, we can go deeper. And this is that whiplash effect that everyone's talking about, right? So if they continue to hedge down here, how this trade can go wrong in the future for the market specifically as if there was more hedging down here, right? We would actually continue to go down. This is how market crashes happen, huge corrections happen, if there's more risk in the future. Now, if the hedging's not put down or placed down here, these same banks, they're going to want to buy those calls back that they sold, right? Above, because those calls that they sold above are now worthless. They're worth like 1 penny, 10 cents. They can get them on a discount. They've already collected the money on selling those calls to FOMO bulls, and now they can buy them back for pennies on the dollar. Does that make sense to any of you guys out there? So if there's no more hedging down here, the expectation would be as we head into the 31st, and we're already down, somewhere down here. There's some potential to dip back down once more to 4,500. We'll get into that too. To buy more, believe it or not because the market's crashing, but just to get the best price on call hedging above as we head into January. Now, of course, this trade can go wrong when we're down, and there's always risk when we're down. So there's covering of shorts down here as well. You take your profit on your shorts, you're taking the profit on that put hedging, and there's no more put hedging put on. This is the implied theory of what this guy's talking about, is that now they're going to buy the upside as a call hedge to the future. Now, if there's no more put hedging put on, the implication would be that these big banks and these guys can move markets. They say they can't, like that the market makers move the markets, so the biggest better out there, right? But in reality, and you could call it dealers and market makers. They're, in this context, they're slightly interchangeable. But the point would be that if no more hedging comes in, that they not only do they have to be delta neutral, but they want to. These guys make money on both sides of the trade no matter what. This is why they're banks. This is why they're rich. Yeah, they do it to move it in their favor, but they don't ever want to lose a trade. Sometimes they do lose a trade. So let's say this is how banks blow up. When you look at 2007, there were some other problems with mortgages being rewrapped a bunch of different times, right? You're selling shit packages of mortgages that are rated at AAA. But let's say I didn't know that as another bank. Excuse me. Let's say I didn't know that as another bank, what was going on in the background. And so I don't think we're going to hedge again, but that some other bank's going to step in and hedge. I'm going to end up buying those calls back that I sold way back here, right, in November, and probably sold some back here in September. So they're going to buy these calls for dirt cheap above. And that trade should, in the covering of shorts, so you've got the covering of shorts heading into the 31st. You want to make the market look like dog crap. I want to make you as retail and small banks think that we're going to crash. I don't want anyone out there knowing that we're going to bring the market back up, because I want discounts into January and March on calls above. And this is interesting too, because there were some 480 Cs out there I think they were from January or March, that on Friday disappeared from the market, a ton of them. And so the thought process is that JPM bought those back, removed them from the market, that they have them, and that there's a good chance that we're going to move up into a very strong January and possibly into March. Now, that whole posit can go wrong, right? Of course, there are things that can change between now and the 31st. We don't know if another bank knows something that we don't know, or JPM doesn't know. That the implication is that it's JPM and that GS is in on this as well. Now, maybe MS knows something that those two guys don't know, right? But the MS has been very bullish anyways. You have to understand the thought or the message that's put out from the large banks to the smaller banks to the hedge funds to everyone below them, right down to retail. There's a message that's put out there so that they are always on top. If you're the top guy out there, you always want to stay the top guy, right? Top woman, whatever. I'm using the male possessive, but in reality, call it whatever you want. Right on. Thanks, is it Fron Troelpine? So, and that's the implication that this guy's talking about. On a basic sense, is that you're selling calls above and you're buying hedge below, and that flips. If no more hedging comes in, they're going to do what? They're going to sell their hedge to unsuspecting FOMO bears. They do it to FOMO bulls and they do it to FOMO bears. They're going to pump out there that the world is burning. This is the general practice. They're going to pump. It doesn't, of course, the market can swing up and down and get more amplified on the downside or the upside. But generally speaking, how this market runs, we know that our markets generally go up. I know that I could put up a composite index chart for you that's gone back to the 1800s, and it goes straight up. So that's the assumption. Over time, our markets go up. That's what happens. Even with the Great Depression thrown in, you still have our market eventually going up. That leads back to some Elliott wave stuff. you know, we go down, but our markets generally go up. So the point that I'm trying to make to you is that they will eventually hedge the other way, right? Eventually, you end up heading up instead of heading down, and they're going to want those calls to print. So my point to, and that's when when we see market melt ups, when you see bulls being scared. Matter of fact, I'm horrible at trading melt ups. It's one of the things that I'm really bad at. The trading that's been going on in the market since November is some of the best. Well, not even, yeah, no, since, let's call it August. This area right here is some of the best trading I've had in a long time. And that's because I can somewhat define what's happening. You will sometimes break out of these support and resistances, but in reality, it's defined. When we melt up, and let's say we melt up, I mean, we can look at it, right? Where we don't have any, we know that we have times where we just crank, right? We're melting, or we melt right here. I'm like when we're down here and I'm buying this down here, when we get to somewhere up in here, I'm fine. When we start to move up, I start to question, I want to see some kind of small pullback. But when we start melting up in here and my stuff's starting to already print, I tend to just day trade this stuff. Like I'll take a nice long 1 to 3 month call option back here. But once they start to print for me, and I start taking more risky and more risky as we get up here. And once I'm getting all my prints though, I stop trading longer dated stuff, and I start just day trading because this stuff here I don't trade well in. When we're doing, these moves like this, these are easy for me to trade. They're somewhat defined, and the end result is somewhat we go up. That's our markets going up point that I'm trying to make to you. So even when we're over here correcting, and you see this larger, I know that I can already tell you guys that there are bears out here saying that this is the larger move down below, or here and here. That there's actually a larger expanding wedge. It's not two expanding wedges like I showed you the other day on Friday. But there's this larger wedge, and we're going down here to the 4,300 or whatever. Nothing's really showing that in the background. But at any rate, when we're trading like this, it's more defined. And when these moves are finished, right, whatever we're doing in here, right, when these moves are finished, they tend to resolve to the upside. They tend not to resolve to the downside when we're making these moves. So let's say we start to correct and we continue to correct down over time. The relief rallies tend to resolve with a relief rally, even if we're trading down over the next 2 years. So let's say we took the bear thesis. It probably would be the best times for. I'll probably make more money during a corrective year than I ever will on one of our better years like 2020. In all honesty, in all honesty, I made more money in the 2020 crash in March than I ever did in my career overall. That was the most money I had made. So, because these are defined trading channels to an extent. Does that make sense to any of you out there? Hey, Steve. Good morning. Good morning, Jay. Good morning, PE. So that's what this guy is. That's what this guy is talking about, is that this will find some resolution at some point. Now, there are other things you need to look at in our market. You have to look at where support is. And when we start breaking through support areas, there are some hard areas that are difficult to break through. I guess the thought process from some market bears would be that we broke through some critical support on Friday. We did climb back up on. We did climb back up at the end of the close. This little move right here, this 4619.25, 4620 was a critical support for some bears out there in Bearland, saying that if we close below that number, and surprisingly it's by 0.75 cents, so they kind of leave you hanging into this week, because their point is if we close below this number, that the next move down is to 4,500. And to be honest, I really don't care if we head down to 4,500 this week. This isn't really a concern for me, and you can actually see back here, we did that once before. We were at 45.90, but there is some significant support at this 4,600 level. It's not to be taken lightly. If up here, there's not as much support. When you're up in these levels, this is some free falling stuff up here. But you have to understand that the deeper we go, right, the walls become bigger and bigger, bigger. Even down at like that 390 level, I don't know if you could break through that if you had a World War III and the United States was gone. That wall would probably still stay up. That's how deep some of these walls are as we correct and move down. And I think that bear thought would be, as we move into futures tonight, into a low liquidity environment into Monday, because the market's going to slow down, that bears could take over for one last push down here. I think you're going to I think the probability is that you're going to see the weakness into Thursday and Friday. You'll see some, well, let's call it Wednesday night, not Friday, excuse me, because Friday we're closed. Wednesday night, I would call it the end of day Wednesday into Thursday. You might see some more strength into next week, but there could be some tail weakness into the 31st. Usually, or the 31st. The 31st will be like should be a bear Christmas. If any of you guys have losing stocks that are losing that you're invested in, you can do a wash sale into the 31st. That's the last day you can do it. So you'll see investors trying to end the year on a positive note. You'll see investors that haven't closed out a stock or haven't, like, this is a good point. You know that there are hedge funds out there that want to see certain meme stocks, shit stocks, speculative stocks. They want to see them close red, and they're betting high risk betting that these stocks will close on the 31st in the red for a lot of investors, so that they sell out of their positions for the tax harvesting at the end of the year. So there are still some players out there that are like, well, if I can pin RK, let's say, until end of year, there will be a ton of sellers on the 31st, and that's their hope. And you'll see some stocks from now until the 31st that will go green again before the end of the year. They don't want to destroy them any longer. They've destroyed them enough. And that's what that guy Marco was talking about from JPM. His point was that shorts have to cover at some point between now and the 31st. And not on all tickers, but they have to in a lot of tickers. You can't. You want to beat up a stock, but let's say you beat up. Let me make a better point. Let's say you beat up RK until the 31st, and you crush RK. And I get you guys with the Kathy hate. I understand the Kathy hate. I'm indifferent to most of that stuff. I'm kind of my emotions really don't run on anything with the market. I mean, I get fear when I'm placing trades that are calculated risky, but so I have no thought on Kathy. But let's say let's say they're snickering and laughing and about it, because I sit in these rooms with guys that like snicker about it. I understand the hate, but let's say they crush RK down to, I don't know, $10 a share on our ETF or something. You have to understand that those shorts will cover on the 31st. Then let's say like January 1, it's going to be like GME in 2020. That's, or 2020, excuse me, 2021 in December. You're going to have a move that is sometimes incalculable, how high they can go. Or they hold off on selling for these names since they want to sell losers for taxes. No, so you'll see. We're going to talk about Apple if that's your question. I'm assuming this is geared towards Apple because Apple is looking very bearish right now. I think there's a couple things we're going to need to talk about heading into 2022. So every year you'll hear the pundits come out. You'll hear this astroturfing saying this is where the trade is for the next year. You'll pop into those stocks and find that they've already been pumped up, and they'll sell to smaller players into strength into 2022. There's a couple things that never change. If big tech becomes tasty again, that will be the play again next year. I know that none of you believe that, but when you start to see Apple at 900, or excuse me, Tesla at 900, Tesla at 750, maybe that takes until middle of springtime. But when you start to see those lower prices, they become tempting to investors. So I don't think a lot of tech is not going to get traded next year. I think that they're telling you that it isn't, but that it will be traded next year, especially as the prices come down. I think that we're going to look at some stocks this morning that we're going to chart out some stuff this morning that I want to show you guys how to catch knives, and I want to show you guys how to look for when it's good for you to decide to buy in, what makes you feel comfortable to buy an Apple or a Tesla, so that you're happy even if the trade doesn't go your way. That you should sell. You can sell calls in these investments too. The key being an investor in the stock market is you want to buy at where you like the price, where you're comfortable with the price. If it continues to go down, how to dollar cost average into whatever rock bottom would be in that stock, and how to sell calls in that stock to protect your investment as it goes down. And then once it does bounce, let's say on the lowest support it could possibly have, theoretically, without there being fraud allegations or something you don't know, that you can then begin to sell puts on it as it moves up to make money on that investment. Now, let's get back to the thing though, the important thing we have to talk about. Okay, so what's this over here? Did you see that order Friday for Apple? It was like $7 billion order at 171. Yeah, no, I didn't see that order on Apple. For all intents and purposes, Apple looks very bearish. I think I've spoken about this in the past. There was a couple points I wanted to make. The first one would be that all these stocks that are under their 200-day moving averages, all they have to do is catch a bid, and they can let an Apple fall, they can let a Tesla fall, they can let an Nvidia fall or an Amazon fall. I think Amazon's already fallen a lot, but you can start to let some of the pressure off of these 4 or 5 stocks that are holding up the market, and then raise up the rest of the market just enough that the indexes don't fall, right? It's like you're kicking out one crutch and then you're kicking out 4 crutches, and you're starting to walk on your own. Steve, I have to say something. I was posting on Twitter a lot. I posted a lot of that film with Daniel Day-Lewis where he drinks the milkshake of the other guy that has oil under his fields, and I like the idea, or I believe in the idea of a blow-off top if we were to scream to straight vertical for another year or two. But I don't think you see the blow-off top. They're trying to manipulate it right now. In my view, what they're trying to do is they're trying to knock all these stocks down below. It's like a house on a foundation of sticks, and they're knocking every stick underneath, and they're leaving four sticks to hold the entire market up, let's say, right? Like the Apples out there, big tech that's out there. And then they're going to slowly sell down the market over into 2022, 2023, while these cheaper stocks can raise up and eventually hit the bottom of that foundation of that house on stilts again. And how would that look would be you'd trade sideways in the indexes and you wouldn't see the underneath part. And you can, I know that bears out there know this. If you look at some of the composites of the stocks under the 200-day moving average, we are in a bear market. The market has crashed in some respects. But the issue is when that has happened on the underlying, how far can they go down, those underlying stocks that make up our indexes? They start to become attractive again. So what does that do? All that money and all that volume that's left our market, you hear on the news, you've got all these bulls out there, you've got all these big market players that have all their cash on the sidelines. They're just waiting to deploy it. Well, the stock market underlying is starting to look attractive to these guys. So while you're being told on the one hand as a retail person the market's going to crash, what they've basically done is they've drank your milkshake. You know, we're all looking at everything being overvalued, and we're all saying, I can't wait for that blow off top where the whole market crashes. I'm going to short the entire thing, and I'm going to make bank. In reality, they're robbing bears of that potential, that shock to our market. Yeah. So and that's the point that I'm trying to make out there to a lot of bears is that they're robbing you guys of that market crash scenario, and that's all we talk about, right? We all know that. Even I know that. I know the market's weak. I'm a bull, but I know the market's weak. I know that I was anticipating some sort of blow off top or some kind of scream to the top. You know, the bulls want to see the scream to the top. I want to see the scream to the top, and that proves the bear theory as well. You'd see one straight vertical move up. You'd see days where we're getting 4, 5, 6% on big stocks like Apple, and then we'd blow off the top. I think the market's so manipulated right now that they are. Now, does this work out for everybody? I don't know. We don't know. They think it will. You can see that they think it will because we have sold for profit all the underlying and specifically that trade, that NASDAQ trade, right? You look at most of the stocks in NASDAQ and they're below their 200. Yeah. So let's say we trade down Apple slowly. You could take those four big stock. You could take Apple and you could take Tesla and a couple others, and you could trade down this market slowly from let's say now, or let's say they keep pumping into January or March, and then they just sell it down into summertime, and then they pump it back up in summertime into the end of summer, right? Or let's say they do it over the course of a year. It doesn't matter either way. You're not getting your market crash. Bears or bulls aren't getting their blow off top. And while they're telling you not to buy these stocks that are under their 200-day, they're probably accumulating all these stocks as we move forward. And so then what's that next cycle, right? They'll already be in all these stocks that have been beaten up and knocked down. You'll buy the mid top, and then they'll run them up, take profit, and leave you holding the bags a couple of years from now, a year or two from now, or 3 years from now, and they'll take a year to sell it all down. They did this with a prime example of this for any of you that are new traders. You can just look at ARKG. That was the trade. Well, I think last year I remember them saying ARKG was a little top heavy, but they point blank. I remember there was carpet or astroturfing last year saying this year's trade is the genome. You heard Kathy come out this week saying innovation, or this past Friday I think, or Thursday, she said innovation stocks are value stocks now. She's somewhat right. She is, and like everyone said the genome, and they said the AI and robotic trade was the trade for this year because they weren't run up, and in reality they sold all those down too, right? That's what they did. They sold all kinds of crazy stocks down this whole entire year. So they will need to flatten, and they will need to consolidate, and they will become a move down the road. I don't know that all of those trades are going to happen right now. We'll look at some good trades that are happening right now. You guys know that biotech. You guys all know out there that biotech has been on fire, right? I think if you guys should be following a guy called at accounts blown up on Twitter. I think it's at accounts blown up. He is heavy into biotech right now for good reason. His biotech's blowing up. And there's a biotech ETF we'll take a look at. There's a few things we're going to take a look at. We'll take a look at the oil trade heading into this year. We'll take a look into there's some risky trades in emerging markets for 2022. So there's an oil trade, there's a biotech trade into 2022. There's some good tech trades too. There's some tech trades that I wouldn't have expected for 2022. Seems like you got a day trade the next couple weeks. Yeah, you remember ARKG calls? Yeah, you should be bearish. It's not that you can't be bearish or even bearish on specific stocks. It's that you have to think from the aspect of whatever the narrative out there is. It's usually the opposite. That narrative of we're going to have this blow off top is what everyone's saying is going to happen. And you have much smarter people than us out there they want to keep all of your money. They want to take all of retail's equity. They want to drain it out of the market. They want to drain the Bears money out of the market. They want to drain Bulls money out of the market. That's the plan. Is that they remove your money from the market. They don't want you excuse me. They don't want you to keep your Bitcoin money. They don't want you to keep you guys all let's say you guys are all holding GME at 300. They want to take all that away from you. They want to take away all the money you made in Apple. They're not going to I know that some of you guys out there think Apple's going to 500 or something stupid, but in reality they're going to turn you into bag holders at some point. They do that intentionally. They want you to continue to buy this market. Uranium had a nice little move this year. Wonder if it continue. I do think the uranium trade's over myself. It's possible. I like the gold miners right now. I do and I don't like the gold trade. I don't like trading gold in general, but those miners, I like the copper miners, but those are a little top heavy right now as well. That's good. This is getting depressing. It shouldn't get depressing because what you have to think about is they've done a pretty good job of making a lot of stocks attractive for 2022. So you should look at that. You should look. We'll look at Palantir today, or Palantir. Patrick, you shouldn't be depressed because they've done a very good job of taking profit on a lot of stocks people like to trade, and it makes it attractive again to new investors. Makes it attractive to people that have taken profit to reinvest, and there is billions, if not trillions, on the sidelines right now. This whole year, if you were to surmise what this year was, it was a year of profit taking. Many people took money off the table. Many people that have been in the market since the COVID trade began, the bottom of COVID trade, and prior, let's call it maybe like 2018, end of 2018. They were in the market for 2019. We had the crash, and they got stuck in that crash, and you had new buyers coming in the bottom of 2020. Not the 2019 crash, the March crash of 2020, which was just after 2019. So yeah, the copper trade for me is a long trade. It's not something that I would trade. It was something I would just accumulate. You've got the well, right now you've got our government saying they're going to put charging stations up everywhere. If you build the infrastructure for electric vehicles, it's going to require copper. You know, one thing when you're trading electric vehicles is it's sometimes easier to trade the materials that are needed for any new tech rather than the individual tech companies. That's what the banks do often. They'll remove the risk from which EV companies are going to get big. They might put their traders, their boiler rooms in on it, but they make their money off of what supplies any new tech that comes out there. Yeah, yeah, it's possible we could chart Veil for you if we can get around to it. So I just wanted to talk about that real quick, get all that stuff out of the way this morning. We're kind of into this already for like 40 minutes. And I know that some people out there just want to get on, move on. So let's just talk real quick about the week, okay? This will be there's a couple things you need to know about me for this upcoming week. I'll be trading the entire week. You might get, if nothing goes crazy on Thursday, you might just get a pre-recorded video. I will be with family celebrating the holiday, and they have internet, but it's not great internet. So I can record and upload, but I cannot go live. I don't think I could possibly get like a hotel room at a Marriott or something to go live. But if I were to go live, you would just hear my voice. It's possible, I guess I could do a podcast or something. But I will be back to trade as well on the next week. I'll be here this week and next week to trade. And so you'll have me most of the time. I can only spend so much time with family, like 3-4 days, I'm done. I don't know about all of you out there. I can't do a whole week. Like 3 days tops. By third day, fourth day, I need out of there, usually. And so I've got that going on for this weekend. So you won't see me this weekend. And so we'll just talk about what my expectations are. So let's talk briefly about the economic calendar. You've got nothing coming up on Monday. Tuesday, not much, but it starts to get more aggressive as we head into. You got GDP on Wednesday. Thursday is really the big day for the week. This is where some weakness can come into the market. Let's call it Wednesday into Thursday. It wouldn't surprise me to see a decent push up on Monday into Tuesday, and then call it some possible weakness end of day Tuesday into Wednesday, Thursday. And we've got the Christmas holiday on Friday. Now, you also have the president holding a presser on Tuesday. I'm kind of scratching my head on the presser on Tuesday because my assumption is it's the same presser that he had on Thursday. And he had that presser on Thursday saying everybody was going to die or whatever. I don't understand what he could say on Tuesday. His people have already said that he's not going to do lockdowns. If I had to guess, this is the interesting thing for you guys to understand, is whenever I see a president doing this stuff, I feel like they're short the market or long the market. I always feel like it doesn't matter what the president is either. You know how what happened with Trump. He would pump the market, dump the market. And I think they all do it. I don't trust any politician. And I don't trust most news stories. When I read a news story, like I just read this news story this weekend that came out about, I think it was Bloomberg and New York Times put out that the work from home crowd is only going to grow. It's not going to end. And my first thought is they only did this story to pump up Zoom. Like literally, that's how disgusting our news is. This goes across all news media. CNN was doing stories over the weekend that didn't quite make sense. In my view, all news outlets, all politicians, they're all greedy. It's all about money. So whenever I read these stories, I think that in my mind, I'm always on the what are they really trying to do right now for or against the market. Literally, that's what I think they're doing. 100%. Yeah. So we have Biden on Tuesday. Maybe that introduces the weakness later in the day. I don't know what time is that presser? Is that at 11 or 1 o'clock in the afternoon? So maybe we have an up day on Monday, and then we have some down days on Tuesday, Wednesday, Thursday. I know some people are thinking, well, we'll burn the market down on Monday, and then he'll smooth things over on Tuesday, and then we'll what? We'll get more stress in the market on Wednesday, Thursday. I doubt that. I think you have an up day on Monday. It's a fair possibility of it. Uh, this is the time when we're down. So just so you all know, the play right now for me is to accumulate uh, short and long dated calls, to be long this market into January and March. The safety would be March. The money is probably in January. There'll be some weakness. I'm sure there'll be some weakness this week. There'll be some weakness on next week on the 31st. And then you'll see a boom in the markets. But you can position now and it will still print. And one of the safeties in this is to trade. I always love trading spreads this time of year. I always love trading or buying spreads on the lows now and then just checking back on them in January or March to see how they print. Yeah, there's always an agenda, and that you become so. I've become so callous about news. Like I can't. I used to like to be. I used to like to read comment sections in Reddit or how news was discussed, and now I realize that 99% of people are Main Street people, and they have no idea that that news is mostly geared towards our stock market. Most of the news. Yeah, I'm still holding, dude. I'm chock full of stuff. I'm chock full of stuff into end of year and into January and hopefully. So here's the deal. If I can get here's the deal. So if tomorrow, if we are weak tomorrow or later in the week, or if we're weak on the 31st, I'll then start rolling into, excuse me, into calls for January and March. Uh, yeah, my whole play is to buy these lows without a doubt. They've worked out. I mean, and I sell the tops too, so don't think I don't short the market. I made a post on Friday about that. That there were places the last 2 months to short, and there are places the last 2 months to go long. And if you were to cumulatively look at all of those shorts and longs, you would have been right every single time on both ends to take the long and take the short. And even if, let's say, we were to have a market crash tomorrow, I'm still up. You can't really lose trading like that. And when you do lose, it's not significant. It's not enough. It's not even a dent in the bucket. Um, let's look real quick at. Let me see if I can bring this. Just show you guys this a little bit better here. Okay. Let me see this. This is what I'm trying to talk to you guys about here, so you guys can understand my point where I'm coming at with this. How do we get this going here? Okay, so let's just briefly look here, okay? This is a point that I was trying to bring up on Twitter on Friday was, if you kind of know, right? This is where I get scared trading. I have a hard time trading all of this as a bull. I take my money at some point and I run, and then I have to wait to start trading this stuff. But when you see us top right here and we start to sell down, back here, see this line here, this dotted line, and this white line right here. We can turn these yellow. Okay. Now these lines, this is where volatility is. Okay. And like a slide ruler, pretend this grouping here is a slide ruler. It expands and contracts, and it moves up and down over time, right? Like it'll move where the market is as we're moving. So you can trade within these bounds as time passes. Now this wasn't way up here, back here, when we didn't have, when we didn't know what this stuff was going to happen. These were slightly lower. But when you're trading within this volatility range, right? You've got a call wall above and a put wall below, and when you're trading within these bounds, it's easy for you to take these trades, know where the walls are as we continue by the day, and trade within that, and you're quite safe through this whole move. You're quite safe when you're bouncing off the top here, and you know you can trade this down. You know that you've gone below wherever the volatility wall was, and then you know that from the puts that were taken out, the short dated puts, where the top is up here. You know where the safety is. This was actually lower as we headed down. This top yellow bands, these yellow bands, lowered as we started trading down. And the same thing took place when we started to move up over here. And currently heading into Monday, this is where bottom is right now. So you would have won this entire trade. It's the same as up here. We talked about this last week on Wednesday, where I said two things to you. I said or they think this was Wednesday. I don't exactly remember what this is. It was Wednesday, I think. Wednesday, Thursday, Friday. Yeah, this is Wednesday, and that was that we knew going into futures and into the open that we were in volatility here. That the prudent thing to do as a bull is you have a couple choices. You sell for profit, right, and do nothing until your next chance to be a bull again. You sell for profit and take short. That's your second choice. Or your third choice would be to let it run, but definitely put some hedging on, right? If you weren't going to continue long here and you were a bull and you were waiting for your next chance, you'd still possibly put hedging on here. But what you don't do is stay long here just hanging out long. We all know what happens. You end up losing all your money and blowing your account up. So there's high risk as a bull up here, and down below here there's high risk. And as a matter of fact, I remember buying this bottom down here on Thursday, and everyone thought I was crazy. Everyone thought I was crazy buying this bottom down here on Friday. People thought I was crazy. Yeah, people thought I was crazy buying this. People thought I was crazy buying this bottom. Yeah, it's really weird. Like when you're down here, everyone's panicking. And when you're up here, all the news is great. There's pumping going on. There's all kinds of nonsense up here too. And you have to learn how to manage your trades. And I was thinking that you guys should be doing is setting get on your cell phone for, let's say on Monday we go up. Let's just say we go up on Monday. Okay? You should be setting like an alert on your cell phone or on your trading app, on your brokerage. You should be able to, if I right click on this, do you see how I can add to watch list or create an alert? If you were to just create an alert for when you get up here tomorrow, or actually it's lower for tomorrow. I think it's 675. I think it's 465 for tomorrow. We start hitting volatility. I'll redo these lines for you today. Well, I'll end up doing. Well, you know what I'll do? I'll make a video for you tonight, showing you where volatility is into tomorrow. But if you were to just set alerts on these lines and then write yourself a message that says, buy hedges. And if you're a bear down here, and let's say you held puts or you longed puts on Friday, or you shorted into Friday for Monday, how many of you bears out there bought a call hedge for 10 cents on Friday at the close? I'm going to ask you guys right now. I want you guys to respond on text message. How many of you bears out there that held short over the weekend or bought calls over the weekend or sold calls, whatever bearish position you took? There were 10-cent calls, 10-cent 470 calls on Friday at the bell. How many of you bought those as a hedge? No, the put wall is higher. Oh no, it's not. I'll explain this better to you in a little bit. The put wall is not lower. The call wall has raised. I'll make a video tonight for you guys so you can chart this out. But I want to know how many of you bears out there hedged with calls, because I'm gonna bet that any of you that did hold puts or short over the weekend did not hedge, because I know bulls don't do it either. I know for a fact that bulls don't do it, and I know for a fact bears don't do it. Anybody? Did anybody buy penny calls as a hedge that went short over the weekend or bought puts? I'm going to say most of you didn't. And you're short, Brandon, you're short into Monday? You're short as well? You're heavy short with some OTM calls? Nothing hedged out of bear. I didn't see in calls at 470 on Thinkorswim. I bought them, but not as a hedge. Okay. Yeah, if you're a bear, yeah, if you're a bear and if you are, this is the same story I'd tell a bull up here. I'd tell the exact same story. It doesn't matter if you're a bear, if you're a bull. It's the same story and the opposite on both ends. And usually, even if we sell off down here, what is the resolution in our market? Always remember that the resolution is up. It always is. And we do sell above. We take profit above, but the banks end up having to deploy money. On every side of a trade, I want you all to remember there are some basic rules. Wherever there's a seller, there's a buyer. And who moves these markets are banks. So we don't move markets. We don't move. We might move like a penny stock. That doesn't have a lot of stock out there. But in general, we don't move these markets. So you have a bank that's selling for profit, and you have another bank that's picking up these sells, and they want to get profit as well. So we will eventually go back up. To go up for those 10 centers to go up. That's a good question, Alex. So a lot of people follow me on Twitter and know that I'll take those 10-cent trades once a week, once every week or so, more frequently than in the past. So usually I'll take the 10-cent weeklies. In the past I would, but the past 2 months I've been taking them every 3-4 days, and they print stupid money. But when you're buying them, it's usually it's all doom and gloom when you're buying them. The timing is like you're entering these trades at 355, 359. Sometimes you have to average down into the 415 time. Like sometimes you'll see the Theta Vampires come in at like 4:10 p.m. So you have to buy another rack at 9 cents or 8 cents or 5 cents. If you make them weeklies, they can be very profitable. If they're weeklies, if you're buying like weeklies that are like 30 cents on down days, like had you bought weeklies right here on Friday, I think I have some. I'm not positive. I'll have to look and see what all my trades are. If you want, I'll post those for you. Where I'm long right now. But if you're buying weeklies down here for, let's say, 30 cents for next week, if the market moves up next week in general and it has a little bit of bouncing going on, like those 30-cent calls can turn into $3 easily, $4 when they get in the money. If they're FDs, they're only good for the move. So let's say, I am holding, I think, 100. I think I'm holding 100 470 calls for Monday. That cost me, I think I started at 15 cents, and then I averaged down to 90 cents or something. I think they're either 468s or 470s. And if we hit 470 tomorrow, it wouldn't shock me. Wouldn't shock me to hit 465.0 on the first leg up. So let's say I just held those. Let's look at tomorrow, okay? We were down here when I bought 470s. We're at 459. If I cut them loose at 465 tomorrow, they would probably print, I don't know, 300 to 500%, something like that. Yep, I lost a toad. See you later. Yeah, watch the replay later. I'll try to put some chapters in for you. I lost a toad, so you guys can go straight to the. You guys can cut past all this talk that I'm doing here. This is becoming a really long live stream. I need to cut these things down, make them shorter. Maybe you know what I'll do later is I'll just do a charting video for you guys, so that you have a charting video. Let's just talk about. Let's get back to what's important, okay? So I'm going to post for you guys on Twitter my handle for TradingView. And you guys can find me on TradingView. I'll send you an invitation so that you can, the stocks that we track and chart out, you can have access to them, okay? So I'm going to show you guys how to catch knives or how to look for stocks to catch knives on. Then I'm going to show you how to chase stocks that are being moved up in the market. And then we're going to look at some individual tickers. What you guys can always do is if you sign up for TradingView, you can set alerts for email notifications or text message notifications, or just transfer these charts to your own brokerage or charting software that you use so that you can set your own alerts. What we'll create a database, a rolling database of anywhere from 1 to 300 stocks that will track into 2022. What I want you all to do for me, if you can, I know that you enjoy the stock market. I want you to start to not fall in love with companies anymore. You can still fall in love, like I love Tesla, but I want you to start to think like a sociopath. I want you to think about people taking profit. I want you to think about where you want to own a stock. I want you to start thinking like this, because if you have a stable of 300 stocks where you chart them for where you want to own them, over the course of a year, at least 1 to 3 times a week, one of these stocks is going to send you an alert for a buy signal for where you want to own them. Okay, when you start to trade like that and invest like that, you stop chasing stocks and you start being a buy, or you start to become an investor that's happy with his trading life. You start to say, I'm happy buying this right here. I can't wait to go back and look at it in 3 months or a year or 6 months or whatever. Okay, or until the next alert where I want to sell is, and I'll talk about that later too. Like you'll find where you're comfortable buying. You'll set another alert for where you want to be alerted to sell or to consider selling or holding on. But Tesla, yep. Tesla 2000, the year to the moon. Right on, you're a boomer. I'm down with that too. I'm down with that. Just be myself. Yeah, exactly. Yeah, you have to really put that Main Street hat on when you're yeah, I promise you, if you don't put that Main Street hat on and you want to decide your future, you're going to be unsuccessful. So you either leave it up to your retirement to be managed by someone that can do that, or you need to learn as an investor, as a trader, how to disassociate yourself with loving a stock too much, because you can really get burned. It blows up accounts all the time. When you start to believe in your head the narrative enough and it goes the wrong way, then you can't switch. And you have to be able to switch on a dime. I can be a bull at 9:30 in the morning and then be a full-on bear suit by 11:30 in the morning, you know, especially as a day trader. Like day trader, I'm flipping hats all day long. Easy to hate stocks now that I'm bag holding. I'm DKNG. Yep. Okay, so let's look at some things here, okay? Let's start with a stock screener. So this is Finviz here. I hope all you guys know about Finviz. You can sign up for a paid account. I think I've paid for it in the past. I don't bother with it any longer, but even their free version of their website is pretty awesome. And I want you guys to open up a I don't know if you can open up a Finviz. Just screen capture this for later, or come back to this in the video later, and you can plot this yourself. Okay, and I use Finviz all the time to find stocks. This is what before I started making videos like this or spending so much time on the internet, how I would spend my Sunday or my Saturday, whatever day I had time, I would bring up Finviz and I would look at two different stock screeners. And I'm going to show you this is not the Falling Knife stock screener. This is my what's moving, or what stocks are the banks identifying that need to be raised in price to meet their awesome guidance, their awesome earnings, all these, and that they're new and that their growth. This hits the nail on the head for any of you meme stock people out there, any of you people that love meme stocks or love growth companies or love tech. This is for you. And this really is what you need to know. Okay, so I put the price above SMA 20. The short float is over 5%. Their price is above the SMA 50 as well, right? On the 200-day simple moving average, the price is above the SMA 200. The average volume was over 500K. Their IPO date. This is the key. One of the keys here is that their IPO date is within the last 3 years. Their stocks, right? Now, their sales growth is over 30% quarter over quarter. The change from open is up. This one you could take off. Sometimes I like to switch this one to down, and I'll explain more about that in a little bit. But this is a good one for day trading these stocks. If you run this filter on a Sunday or on a Monday morning, if you run it on a down, you're looking to buy the bottom of a trending channel. If you're doing it on an up on a day trade, let's say I open this on a Monday morning and it's showing that it's up that morning, I'm going to show you that they're trending up in general. And I'll show you these right now. We'll start to chart these out real quick. Now, sometimes let's say I open on a Sunday. Sometimes I open on a Wednesday. Sometimes I open on a Friday, then a Sunday. This list will change every week. The list is usually short, anywhere from 3 to 10 tickers. And you'll see them change depending on market conditions. If the market's going up in general, I'll get more tickers. And right now the market's been a dog, so the number of tickers that are on this list right now gets smaller and smaller. And what I'm looking for is a company that's IPO'd in the last 3 years. I'm looking for them to have ER or quarter over quarter ERs that are exceptional, that they are making money, that they have an actual product, that their guidance on growth in the future is exceptional. So when you guys that are following me, I want you to get yourself one of these Finviz presets, bookmark it on your computer, and then what you're going to do is you're going to look at these tickers when they pop up, and you just check on them. You do some research on them, check their growth, their sales, their expectations, their guidance on, and then look at the channel that they're in. Look at their next ER date so that you could buy a low for their next ER date because they'll get moved up. And anyways, we're going to chart some of these out. So this right here would be when I'm talking to you about, are you tired of catching knives? Are you tired of being a bag holder? Are you tired of, being the last person to buy GME instead of at $5? This is what you're looking for out there to trade. And so we'll look at a few of these right now. We can just show them too sometimes I can do it quickly. If you look at the charts, sometimes you can see if they've been selling heavily here, or if they're making a move right here. You can start to look at these. These aren't really the greatest right now, but we'll look at them all. We'll chart them all real quick, and you'll start to see down here this consolidation below, a move up, right, and then it hits support. Harmony looks like a good one, right? We can check out Harmony. And you don't have to be the greatest chart expert out there to be doing this stuff. HRMY will do. You know, we don't even have to do that many stocks out there. You can see how erratic this is, right? You can see that this is kind of a weird stock to be looking at, right? We'll look at 6 months, look at a year, 5 years, right? And you can start to pretty much trade, or you can pretty much draw these lines just like the professionals do. So you've got support here, right? You see this consolidation down below, right? We moved up, sold for profit. So you know where the buyers are. The buyers are down here at $25. Sold for profit. We bounced down here at $33.79, right? And we're going to look at a little bit. Let's see if I can put some volume. Let me put a volume indicator in here. Put a volume indicator in here. Nope. Nope. Hang tight. Indicators. Let's do a basic volume indicator. Just a volume indicator. Make this nice and simple. Easy peasy. Right? You see this move up into earnings right here. See this nice green bar right here. Right? Bought this low, took it into earnings. They took their profits and ran. We sold back down. Right? And we're looking for some volume in here. You see this volume accumulation on the top left-hand side. You'll see 2.45 million. So we'll start. We're on the what's our time frame? A week. So we'll go to a 1-year chart, and you'll see this nice accumulation in here, right? I'll bring this chart back for you. And you can find a trading channel in here. Okay. You know that you see right here, right? You see that there are some trapped sellers in here. There's capitulation down here. They probably rebought back in along with the banks, moving on up. You see that we had some sellers above. So rather than catching knives right now, we're just talking about where the sellers are. We know that there are sellers above here. We know that there are probably some sellers above somewhere up in here. We know there's probably some more sellers above here. So though this is probably not the best buy right now, we know that what we're looking for is, are there still sellers up here, right? We want to know if there are still some sellers over here. So what I'll do is, which one do I take? Oh, nope. You know the banks are on this trend line. They sold for profit down here. You know the banks are right here, and they're going to want to take some profit. You're probably going to have some volatility at 42.49. But if we make a leg up above here, you're going to be looking for a move up to $50. So if there's any weakness in here, moving on, right? This is December 27th, 30th. If you see any weakness in here, you can see that we're at $50, right? This is starting to become a losing stock. Let's say we sell down here. You're going to set an alert on this bar right here on your own charting software and TradingView. And every time we touch right here, you're going to buy moving forward. Does that make sense? Do you guys understand this? So we've had a move. You see this move? Right? We have this recovery here. If we sell here and we bounce back down and find support and you get an alert here, you're going to look for buyers to step in to make this breakthrough above. You'll make tight stops below this line right here. So you can set another alert. It's down below. And you make this your stop alert. So you set an alert below here. So let's say you buy this dip right here. Let's say we have a little bit of resistance above, right? You buy this down below to go up. You put a stop on this line right here that sets an alert. So let's say you buy this and you go to work that day and we start to break through this hard support because we know that the banks are moving this here. This right here is a heavy support line. We know we got a reaction twice. We know we're going to get a reaction over here. Well, most definitely. And this should create a squeeze condition to push us up to $50. So let's say we miss this trade and it just keeps going up. We can let this one go. But if you have this trade in you're setting alerts on in your brokerage, you know that on let's say on the let's say it's on January 10th. You get an email message that says, "Hey, we're at $36, Captain Jim. Do you want to buy this?" I'm going to look for news out there, any negative news on Harmony Biosciences. I'm going to look to see if they have any news coming out. They have expected, a lot of these biotech stocks, they might have an expected news release that they're expecting to come out. They might have had a news release here on the 30th. But either way, you're looking for some kind of a support here. This is your tight stop right here. You set an alert for this in case your trade fails. But otherwise, you want to buy any weakness here for this next move up. So you can do your due diligence on this company. You can end up setting alerts to take this long. You can see that they're moving this long right here, that they've reversed course. And the last thing I want to talk to you about this is, let me see. What's the biotech? Is the biotech, let's see, the Biotech ETF, is that, I think it's, is it MSOS? I can't remember. I can't remember if the big one is, yeah, XBI. Let's look at XBI. That's a good one. So let's say now you've identified this tech stock or this biotech stock and you're like, "Ooh, yeah, I like this." And I hear everybody's talking right now about biotech. So let's say I don't want to take the risk on an individual ticker here. I'm going to bring up XBI. This is the Spider Biotech ETF. I'm doing my due diligence, right? And lo and behold, what am I looking at here? Got this nice consolidation phase right here. Back here, you see this in August of 2020, right? Saw the trade was taken up. These are banks. This isn't you and I doing this. They move this ETF up to $174.88. I know that everybody's talking and chatting about biotech right now. Hot talk, right? And all of a sudden, what do I see down here? You see this over here on your left? You see this accumulation phase? Bottom left-hand side. And what do I see right here? See this giant accumulation phase? You see this on the right over here in December? So I'm going to start to say to myself, oh, look, I've got biotech companies coming up in my stock screener. I see great profit taking in biotech over here. This started in February of 2021. Now I have been drilling into all of you the past few weeks. I've said to you, you're looking to identify stocks that have been selling off since at least February of 2021, if not before, right? So this looks like a good candidate. Now, does this mean it's going to work out? No. I'm not giving you financial advice now as to what you should be investing in 2022, but we have to take risk on as investors. If I'm looking at this biotech ETF versus the SPY or NDX, right, the NASDAQ, this looks much nicer to me at this moment than NASDAQ. Not as risky, right? And I want to put on some risk in this market. I don't know where to put on risk. I'm not a bear. I don't like being a bear is dangerous. It's not easy being a bear. It's the one thing I'll give you bears out there is it's dangerous. You see hedge funds blow up. The smartest people in this country, they blow up all the time, all the time. So when I'm looking at this right here, this looks pretty reasonable. I could put a stop down below on XBI. Let's say I put, forget the stop. Let's say I put send me an alert because I'll buy this right here. Matter of fact, this is one of the ones I'm gonna be buying, but for 2022. But my point is, let's say I have an alert set here. I set an alert for here, and then let's say I set a doom or gloom because you know that there are fishing expeditions. You know that algos will dump us briefly for just a minute, a day, half a day to shake out people to accumulate their shares. And this looks like it's ready to move. I mean, this looks good, right? You put an alert here. Maybe this is your stop loss down below at 100, 107. We're only at 115 right now. This is looking pretty tasty. When you figure we probably have some trapped sellers above at 148. I mean, you can't deny that this doesn't look like a great trade. You've got some volatility that'll probably enter here, somewhere up here. We could turn that into like a zone of volatility. You might find a little bit more down here. You could put another one, some trap sellers down here. We'll make that one a little bit different. You can set alerts for all this stuff. When you set your alerts on these things, you can put specific notes in there. Trapped sellers. You can write. I write trapped sellers all the time because I'm looking for them. And then as this moves up, you know where the support is. When I share this stuff with you guys, as we move up, you can raise your stop losses, right? Where this alert is, you can actually raise this up, and it will change in your alerts where your stop losses are. I don't know if any of you guys know that, but when you make an alert on one of these supports, you can actually move them up to alert you for for when you've broken through your support, where you want your stop losses to be. And let's say you're heading up here and you start to bounce off this first, right? You'd eventually move this one up right here. You'd move your next stop loss down below here, and you're looking for some. They'll probably sell up and sell down until they can consolidate once more, just like this. See this nice consolidation phase right here? You'll see something like that take place again. We'll move up and up and up. You guys understanding all this? I'm going to stop for a minute and talk to you guys about this. I want to hear what your thoughts are at this point. Hey Cap, are there any tools you use to size positions, especially when hedging? MSOS is weed. Is there? Yeah, I got the wrong one. It wasn't MSOS. Well, look, I have a list over there, a paper list of stuff that I want to look at today. So it just happened to be right next to XBI. Is there an stereotype stop loss to get out? You set an alert to buy on more weakness. Looks like it could go a tad lower. Chase window. Yeah, Chase, let me show you a tad lower, okay? Let me show you. I want to show Chase this so he can see it. So when you're catching knives, I want you guys to understand what you're looking for when you catch knives. You'll see moves like this over here. You'll see these capitulation moves, and then you're going to be looking for hard bounces. 1, 2, 3. When you start to see this move in here, you're looking for giant red bars and giant green bars. And that's pretty much what's happening right here. This is accumulation right here that's going on. Matter of fact, we'll bring it to a day so you can see it on a better time frame. Let's scroll this out a little bit. I want you guys to see what you're looking for when you're catching knives, and you're looking for moves like this. You're looking for this big giant red bar. You're looking for a couple more slims to try to go lower, and utter complete rejection. This isn't retail. These are banks that are saying, nope, we're buying here, sell me everything. Capitulate to me. Oh, yeah, 107 does look better. And you can wait. That is one thing too, is you can, if you're, let's say you're bearish, you can set an alert to buy at 107. And if you make enough of these, it doesn't matter if this one doesn't work out for you. You want to, though, chart a bunch of these. You want to chart 100 to 200 to 300. And the neat part about charting these out for yourself is that you can come back in a year or 3 months or 2 months. Well, you know what I normally do is I'll chart these out, and lo and behold, like 2 weeks or 3 months or a month later, I will start to hear the chatter. While everybody was all doom and gloom, a month later, 3 months later, 6 months later, I'll start to hear the chatter again, and I'll say, oh, they're talking about this ETF or this stock that I charted out a month ago. And having charted all this out, I want to see where it is now. And it will make you a better buyer, a better charter. You'll do a much better job at charting out a stock because you'll see where your faults are. You'll start to figure out where you should have actually drawn supports on stocks, where to buy and where to sell. It makes you a better investor over time. By charting these stocks out, and let's say you add 3 of these a week or 5 of these a week, over time when you start to hear, let's say no one's talking about XBI right now, I guarantee you, the next month you're going to hear everyone raging about XBI. That's all they're going to do. It'll be something positive, and you're not in XBI any longer, but at least you charted this out to see, hey, I should have taken that trade. Does that make sense? Let's say in 6 months and a year after doing this, 3 months, whatever you're comfortable with, you'll get a better idea of what you're looking for to buy and to sell. And you can see it right here, right? Basically see, this is your buy, right? You can put one more line below down here as a stop loss. This is your buy zone. This is your sell zone, right? And then you're going to look for a new support to be put in for consolidation for the next move up to $175. Yeah, I mean, this looks great. I think XBI looks great. I think you'd have a hard time finding many ETFs right now that look this good. And everyone has to put risk on. If you're not putting risk on, even if it's a calculated risk, then you can't be in the stock market. There is risk involved. Most people lose all of their money in the stock market eventually. But if you're going to take on risk, you will have to at least, would I be telling you right now to buy 175 on the XBI? You guys know I wouldn't, right? You guys know that I'll never show you a stock. I'll never tell you to buy Tesla at 12, or I was telling people not to buy Tesla at 1200. I got yelled at by all the Tesla bulls. I don't buy up here. I buy down here. Always, I buy down here. Always, 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 I'm buying down here. Or I'm buying on strength, a reversal down here. Some of you bears out there probably say things like, this is a good one too. A bear will say the corrective phase isn't over. And that does make sense. Let me, hold on. Let me show you something else, guys. Or you know what, let me do this instead. So, brush, you'll see a corrective phase that goes like this. Sometimes, right? There'll be a move up, and then we come down, and that is probable as well, that can take place. I'll make videos. I'm doing a training class to talk to you guys about this. Oh, sorry, hold on. I'll show you guys how corrections happen. Sometimes you'll see a move down. You'll see one move up that'll trick bulls, and then you'll continue to sell down to an actual bottom down here. So you have to be aware of these moves right here. And this is actually what took place here. You can actually see that it took place. We sold down, right? The bulls thought they had it, and in reality, this is usually algorithms doing this. Computers will do this. You'll see this often in bonds, that you'll see one more pump or two. It'll trap buyers, and there's another corrective phase down. As a matter of fact, this is more than likely the move for Tesla. You'll see this will be Tesla at 900. You'll see a move above. Everyone will buy Tesla, and then it'll shoot down to 750 into the new year at some point. This would be the January move. If you were going to see Tesla make a move up, this would be that January-March play. And then once we hit that January-March number, let's call it 1100 or something, we'll sell back down to 750 into March probably. I can't give you an exact time frame, but some move like this is what I would expect out of Tesla. And this is a common move in stock retracements, in corrective, in stock corrections. But this looks good right here. This looks like the correction is over. You are already going to put stops in. So let's say you're at 107, and we start to break below here. This is where you'd pull the plug. So if you're putting risk on in the market, you know that there's always going to be risk. You know that these plays aren't going to work every single time. So let's say you're going to buy in here. You would already know that if we get below 107, or let's call it 105 or 100, that would be a psychological. 100 would be a psychological break. And you could put something down here at 100, and you just call that your stop loss. And you can mark all these, write some words in here, type in stop loss, do an alert for yourself. And you don't have to trade all these indexes or stocks. You're just gonna be accumulating these, and then you do some due diligence in the ones that, ready? This is where you like a stock. You say, hey, I like biotech. I'm gonna do Harmony, and I'm gonna do the Biotech ETF for safety, right? Or I like tech because we've got tech ones we can do as well. And you're going to track these, and you're also going to find the one that you want to trade that is reversing course or showing signs of reversing. You see all this volume down here. This is important that you have all these indicators happening, that this could be this looks like a reversal. How far is that reversal? Well, right now we're looking for what? 134, right? For volatility to kick in again. And ultimately we're looking for 150 at a minimum, or slightly below it, probably 148 if I had to guess, or 146, somewhere in there. 146 would be my target price. That's what I'm targeting. Oh yeah, PubM's a good one too. PubM's a great one. We'll look at PubM right now. Actually, let me show you one more in the stock screener. So you've got ALEC. You guys now have what I do here for Harmony. You guys can do the same thing for ALEC. Look at the consolidation on ALEC real quick. Let's look at ALEC, but PubM, yes, I want to revisit that. Or I will put, if I don't get to PubM, I will at least chart it for you to have access to. So let's look at ALEC real quick. Because I think I have PubM charted on my Webull. Oh no, wrong one. Hold on. I think I have ALEC charted on my Webull, or PubM charted on my Webull, but not on TradingView. So I'll chart it out on Webull. So this is a beautiful chart, right? We have on ALEC, we have great consolidation down here. We're going to change these to solid lines. Always like to see this stuff, right? Buy into weakness, or sell into strength, right? One more bounce here. We know that this is now, or at this point was support. You saw that bounce. We did it again. We sold, and of course, we've got that nice little line right here. We already know that there are trap sellers above. Took profit again, sold it down. We had capitulation, went nice and deep down here to $7. We know we had buyers down below. They brought us up. We had moments of consolidation. They sold it up, took more profit, right? Sold it down here. Probably looking for some consolidation. Again down below, even though it's turning up right now, we probably have lots of trap buyers in here, right? Even if we miss this trade, that's okay, but we're going to chart them out. You're looking for a failure. So you'd set an alert here. You want to be setting an alert here. And hopefully you can get some capitulation. We know that this has worked in the past. We know it worked here. We had consolidation, profit, sold down. We know we had more consolidation, profit, sold down, trying to work its way back up once more. We know we've got some kind of a save over here, right? So we'll put another one over here. Another little supposed support line, but you're looking for a reaction here. You're looking for us to not break this, another bounce. I always like to see, you ever hear people talk about double bottoms, triple bottoms, right? I gave you one chance to dump it. I gave you two chances to dump it. I gave you three chances to dump it. When you try to dump it 1, 2, 3 times and it fails, what happens? We go up, right? So you get 1, 2, 3, starts to create this nice little wedge down here. Let's say we bounce. My expectation would be that we're gonna bounce here, 2, 2, a brief capitulation down below. And really that's the moment that you're looking for. You're gonna buy and you're gonna see this rocket up again. Does that make sense? That's what I'd be looking for on this stock. You might even have, this might even come up a little bit and then fail. Bounce 2, third capitulation, then you'll get your true push up even higher. But that's why you're setting these alerts. You want to see the failures. You want to be alerted so that you don't have to pay attention to the stock. You want to be able to just come back to it, see what's going on here, see if it fails. You want to see if it continues to consolidate. And let's say ALEC pops off for you at $15 in a month or 3 months. That's a buy for me, 100%. If ALEC ever comes back to 15.22, I'm buying it. Does that make sense? Are you guys all following along with this stuff? We'll do one more right here. I don't like this one, BFRI, but I do like this one, HCDI. I don't always like these. Harbor Custom Development. Remember to do your due diligence on these companies. $5. Now it's down to $2.88. This one I'd consider risky. I don't like trading penny stocks. I consider anything that's I consider any stock below a certain market cap, 3 billion in market cap. I don't really like trading these smaller stocks this small. Anything that's really this tiny, $1, $2.88. I might set an alert for this one back down at 288 again. I like this volume here. This is nice volume. What day was this? November. I like this accumulation down below here. This is in November. They bought at $1.73. I guess I'd set another alert down here. I will trade these sometimes, but it's rare because I don't like to watch them. You know that you see that they took profit up here too at 302. Bought down below here somewhere $2. They sold at $3. I don't really like this one, but let's just say we sell down to this 173. I'd probably set an alert at 218, and then I would I'd set an alert at 213, and then maybe set an alert for just to pay attention, and then set another alert at 173. And I'd be looking for sellers above somewhere up here again. This looks like it could rip, actually. This is a risky trade. But it does look like it's accumulating for some form of a large bar up. Maybe it could tag, let's see, this could possibly tag $3, 371 maybe. I don't know if I like that either. I don't like trading pennies anymore. I did this. They're always so risky. So many scams with these stocks, but you can see what it's shaping up to be, right? This is why people like this stock right now. Consolidation, boom, some small rejection. Maybe we swoop down. I shouldn't be doing this stock for you guys. These are not the stocks you want to be trading. But you'd be looking for something like this, some kind of a high spike to $5. If I had to guess, something like that's going to happen. If not allowed, let me know and I'll DM you later. Hate calling for tickers, but I own Geo and failed to sell when it squeezed $11. Now I've been holding almost a year, so still up and not on sale yet. Okay, so what I'll do is this. Alex, send me a DM so that on my Captain's Alpha handle so that I don't forget. Blow off bottoms, high volume, especially takes out a previous pivot low. Take everyone out, absorb shares. Yeah, Little Big Bear knows what he's talking about. 100%. Absorb those sellers, man. You straight capitulation. Take their shares, force them to get back in, or you dump it. Just even if they don't sell. So you've got two. What happens in that situation? You get two things that happen. You're absorbing shares from the market, and you're creating bag holders that come back in with more money to push it back up. So it's like both of those things are creating this kinetic energy to drive that stock back up. Now, personally, I don't know if I would. When I was a new trader, I would trade this all day long, but I don't do this anymore. I used to I'd hunt down these companies and find out if I was going to take a large position, like a $30,000, $25,000 position in a company like this. I'd probably catch like a Spirit Airlines flight, find out if they're legit, talk to like the desk girl, buy her lunch, walk in the front door. I kid you not. Yep, take it easy, MA. Okay, so you guys have a firm understanding of not catching knives. These stocks will change every single week. Now we're going to talk about catching knives. Okay, we're going to move on. So this is my knife catcher. So you're only doing stocks, right? You don't want to be doing. You can go by sector. If you want to talk about sectors, you can look at biotech. And then what am I looking for here? Hold on. Yeah, stocks only, X fund. Am I in the right one over here? No, sector. Wrong one. Hang tight here. I have the wrong one here? Oh, wait a minute. Oh, I'm on the wrong one here. Hang tight. Yeah, index, stocks only. Industry, stocks only. Where's my stocks only button over here? Why is that not coming up? Or is that the top? Yep, right here. Stocks only, excluding ETFs. Okay. So you want price below SMA 200, the 200-day moving average, right? I'm also looking for relative volume, and I usually try to begin at least at 3, and then I'll change this to 5 and to 10, okay? So we'll start at 3, and you'll see that the number of stocks become lower. So in my relative volume, let's say we'll start it at 3. And then I'm looking for, where's the up one at? Yeah, the up is change from open. Change from open, I'll do up, right? And I start to make these stocks go down. And I don't trade small caps often. I don't trade penny stocks or $1 to $10, $25 stocks. You can do like a market cap on this to make it, if you want to do like what their market cap is to weed out a bunch of these. Typically, I'll just change. Oh, nope. Wait a minute. Hold on here. I'm actually looking for price. This is really what I'm looking for here is price, okay? And this is basic. I mean, this really doesn't mean a lot here, okay? Now, we could do there's some other options in here that I can put in that will actually improve this list. But for when you're getting started, I want you to think about a couple things. If you're a knife catcher, you're looking to be below the 200, right? Why are you looking for volume over 3 times volume? Because you're looking for those red bars. You're looking for capitulation moments in these stocks. If I switch to, let's say, so right now I've got a total of 392. I'm at a high price here so that I can start to look for names that I recognize, that I hear in the news right now, negative or positive. Then I'm also looking, let's say I go to relative volume over 5. See how I'm now down to 125 tickers? Over 10. Now I'm down to 30 tickers. Right? So I can start to look for any names that I know. And you can see right here, what's the first thing that we notice over here? And just by industry, biotech. And we just charted the biotech, right? We just had a conversation about biotech. And I just said to you, oh, look, it looks like Biotech ETF, and this biotech stock is starting to turn positive. Now, what am I seeing as my top stocks in here? I can start to identify some biotech stocks that are starting to flip, right? So you've got all of these here, all of these biotechs that are starting to flip, these industries. Shocker, look what I see down here, more biotech. You get what I'm saying? So it's kind of weird that biotech is turning right now. So we'll bring it back to 3 for right now so I can show you the next step in this process. So we'll go to 3. We know that they were up on Friday. Now, what does that mean for us? We know that the indexes were consolidating down. We know that some stocks, though, were up. That implies that shorts are being closed in some of these companies as we head into the end of the year. That implies that if we run this scan as we head into the 31st, we're looking for shorts to be closing. And we're going to be looking at names that you know. You want to be trading names that you're aware of. Like everybody knows WD-40. Everybody knows Airbnb, right? So we'll chart Airbnb next. So let's look at Airbnb. Sometimes is it Airbnb? I always forget how to chart. I always forget Airbnb's ticker. ABNB. Yeah, I always want to put an R in there for some reason. I like Airbnb. I've traded this stock many times on Twitter. I know a lot of you guys. And you'll see this nice green bar over here. You can see it down below. It's kind of hard to see. But we know we have consolidation on Airbnb. I've charted this one many times on Webull. I know some of you guys have followed me on Airbnb and have made bank. We traded this move right here. We traded this move right here. This one printed giant. This whole move, we traded this. This move was banging. So we know this is bottom. We know we got 1, 2, 3. We know we have bottom down here. We know we have some consolidation zones. Right? We know this is a consolidation zone. We know this is a consolidation zone. We know that really we want it down at 130. We know that, being greedy, 130, if we had one day of capitulation in springtime down to 130, this is a buy, right? We can say for sure this is a buy at 130. We know that buyers stepped in over here this week. We know we had some major sell downs over here. You can see right here we had buyers. We had some up days. You can see that right here. You see the buyers. See last time what happened? We had buyers back here. What happened? See what happened back here when we had buyers. And all of a sudden we had buyers here. We had buyers right here. So what does this look like to me? Looks to me like in the short term we have a buying opportunity. It looks to me like I could probably throw some outside the money calls on this dated for January or March, and these probably print. Risky. I could cut them loose if we start to trade down at a certain level. Whoop, hold on here. Hey, I gotta reset this. This happens to me sometimes. Let me leave this. A, B, and B. Launch the chart. Put the auto on. Sorry, when I expand my page, for some reason it'll blow up. It gets all goofy. So I know right now that there is some interest in playing Airbnb. You can tell from the buys that took place over here. I'll bring this down to a monthly. See this nice giant green bar over here? If I had to guess, these are shorts that need to exit before end of year. That would be my guess. There was a rejection here at 155.03. You can see this gorgeous consolidation over here. See this? Yeah, this is nice. Would I hold this long term into next year? Probably not. I would set an alert to buy this next year at 130 or above. I would probably buy Airbnb as an investor at 140 and start averaging down. This is just my investor cap on right here. Somewhere right here is where I'd want to buy it as an investor and average down to this 130. I know for sure that if you are a zero risk type of investor, 130 is sexy. If you do 300 of these stocks and just 2 or 3 of these hit in a year, you're going to be a happy trader, happy investor. This is like buying the bottoms on the SPY. If you'd only taken 9 trades, 12 trades this year on the SPY, you'd be rich. So if you're a conservative investor, you'd set this and forget it until it comes back down to this 140 to 130 area, at least to pique your interest. For me as a risk-on type trader, my view into January, all this volume, this buying that I saw down here, this short covering, my expectation would be that Airbnb is probably going to squeeze at some point coming up. I would probably throw some dirt cheap outside the money calls on. Probably, I mean, there's 2 ways to look at this right here. You could just take this trade to resistance above. That's 155 to 168. We're in December here. Watch my cursor. And this is looking ripe right now. Absolutely looking ripe right now. This is looking ripe for just a move to 168 in the coming week. Monday, I bet this could happen on Monday. It's possible. You'd ask yourself, how high can it go? You don't hit risk until you hit 172, 168, somewhere in here. Could it go higher? Sure. But where would you put your risk on? Like you'd put risk on here or slightly below. Let's call risk at 149. You'd take it right here to just below. I'd let this, react and come back down over here. If I was going to put more risk on, I'd wait for it to break above, especially if it was a wild squeeze type play. Let's say it breaks above, bounces once or twice, and then rockets up to sellers right here, 1.8 in the 180s. I should change the color of this. I'm doing the bear colors. Nope, hold on. Where do you take the risk here? Take the risk just here. You're buying this to squeeze into end of year. Could be Monday. Or you're looking for some form of consolidation in here to squeeze up. This has good potential. This is something that I'll be looking at on Monday morning. This is something that I wouldn't be surprised to see squeeze either into Monday or possibly dip below. Oh, hold on. Put that in the trash. Just something I'd be looking for. Be something where you could possibly swing down, consolidate up, bang, come down. It rockets into beginning first of the year. Either way, you could put spreads on here, put time on them into January in the money. You could put the spreads deep in the money down here at 140. I mean, you can get real conservative with this stuff, so that the future here. Airbnb looks great. So you see how I'm looking for these things? How many are with me right now? 59 of you? This is how you catch knives, right? You guys are always looking how to catch knives. Airbnb will probably be pushed down by Omicron news in short term. Yeah, that's a good point, Blood Stunt. That's a very good point. Do you think that possibly that Omicron news is intended to push stocks like this down for the next squeeze on Tuesday? Possibly. Yeah, you do some call spreads. I think Bloodstunt's got a fair point on that. Absolutely. You find down here and you set these alerts. 140. You could set it at 145, 150. You could pay attention to this stock as we move through this week. Wouldn't shut. Let's look at this real quick. So he's got a fair point, right? So let's say you get. Wait a minute. Hold on here. This would make sense for Bloodsport, right? You get some kind of a stupid squeeze up on Monday. Biden comes out and says something insane. It could be anybody. Trump, it doesn't matter. It doesn't matter who it is. Something stupid and insane. Sells back down here. Doom and gloom into the first of the year, or into the 20. Let's say they call it the 30th, 31st, and then into January, February, you get that rocket ship up. And you're setting alerts here. And what's interesting too is when you set these alerts, it wouldn't shock me to see Biden's press conference like 11 o'clock on Tuesday, and we're right here. And that's always how it works out. It's always funny to see, like, you're like, how is it that we went from here to here on stock X or whatever, and we're just happen to be right here just before some negative news is coming out. Then all of a sudden you're down here and it's December 31st. And the stock is right on a level of support. It's always how it happens. Yeah, I'm not disagreeing with positive catalysts either, or Omicron. Omicron's used. I trade the news, but I don't trade it like I trade it where what are they trying to signal and where we are on the chart. So if we're right here, I'm typically expecting bad Omicron news. If we're down here and we're right here, I'm going to expect Omicron news to be good. Does that make better sense on how to interpret the news? Right? You'll expect bad news here for Omicron and good news down here. It doesn't matter if down here is here, over here. I'm going to expect good news and I'm going to expect bad news. That's usually how it works out. But you call it 70, 80% of the time. And this is why, so just so you know, the old adage of people or of the market not liking unknown news is because most news is planned for them to make money and not you. So let's say we're here and we're supposed to sell off down here. Let's say we're right here and a president's going to come out and give us some bad news, and all of a sudden Airbnb comes out like an hour before and says, oh, by the way, we just got bought out by Microsoft. The banks are going to be pissed because immediately we're going to squeeze stupid high. They're going to lose their shorts that they're placing at that moment. They're going to rage and get pissed off, and they're going to pound it down as best they can to get their short money back. Does that make sense to any of you out there? I hope it does, because that is what happens. They do not like unknown news. Banks hate unknown news, especially when they have a plan for what they're doing with a stock. Anything to take more retail money. Can you do Vail? Got hit on China. Yeah, so do me a favor. I want you guys can each text, or I want you to DM me on my Captain's Alpha handle one ticker. And if I can get to them, don't go crazy. I don't want 100 tickers inside my DMs. DM me one ticker that you want charted out, and I will chart them out and put them on here for you. I can't get them all done today. I have to have, it's 1 o'clock. I've been here since 11 with you. So here's what to expect at this point, okay? I'm going to make a video with your volatility zones on the 3 major indexes. I will include Tesla, Apple, and whatever stocks are holding or pimping this market out, okay, in that video. I know there's a few. I forget off the top of my head which ones are actually propping up. I know NVIDIA is, I think Microsoft and Google, Tesla and Apple. I'll have a video out for you for Monday. That'll be short and to the point. I want you to apply these levels to your charts for Monday. Doesn't matter if you're a bull or a bear. And I want you to set some alerts for buying hedging in both directions. I want you guys to start trading within these support and resistances so that you stop losing money. You can go full bear, but I want you to take that short to support. Then I want you to either put some hedging on for an upside move if you're going to stay short, or exit the move and re-enter it once we break below that support. That same thing goes for bulls out there, okay? You guys all get this? Oh, is my DMs not open? If my DMs are not open, I will open them to you guys. Johnny, yes, I am. You know what I'll do is I'll check invite. The moment I sign off here, I will check invites and get you guys in there. And I will check to see if my DMs are open, okay? If my DMs are not open, I will open them. Not my regular handle on Twitter, my Captain Jim James handle, they are closed unless you're a friend of mine. That's because I get a lot of crazy, my notifications. So people put my regular handle into, they'll tag me in these loop messages so that I get like 1,000 notifications in a day. People will DM me crazy stuff, it's insane on my regular handle. So on my Captain's Alpha handle, I will open my DMs because there's only 1,000 of you. Unless I find you guys are fucking with me or something. I'm sorry to swear, but unless I find one of you guys out there messing with me, then I'll block you. That's most of what the ban. Just so you guys know too, I don't talk about this on my regular Twitter handle, but often on my regular Twitter handle, I'm not able to respond to a lot of you because of the spam stuff that I get on my handle. It's wild. Like I get spammed all day long in all kinds of forms, so that I miss your notifications that you've commented. It's a mess. Twitter is a mess in some respects. So sometimes I'll block people, I'll ban people. I used to not block people, but I have to sometimes because of that. I just can't keep up. So it's better for me to talk to you guys over YouTube. And I wouldn't mind doing like a live Zoom call one day, like maybe 100 of you or 50 of you or whatever. We could do a live Zoom call and just talk so I can meet you guys in person or whatever. 1231 calls on SPY. Yeah, Tegan, that's a great question too. So what I always say is take profit. I think I'm going to talk about that in the video today on the SPY as well, is that don't be diamond handing. If you guys are placing calls, let's say you're placing weeklies for the 31st. Let's say you bought some weeklies at the close on Friday and they come in the money, you know where resistance is. You know where to take profit. If you want to go deeper, let's say you think I'm crazy. Let's say you're like, hey, Captain Jim, there's no way we're going to sell off on the 31st. You don't know what you're talking about. I'm going long. Then at least put some protection on. Buy those cheap puts at the top of that channel or that resistance point or that volatility trigger so that you have some protection. Does that make sense? I want you guys to understand this, that let's say you buy a 1231 call and it's making money. Let's say it's up 10% and we hit a volatility trigger. You either have to call that profit at 10%, take your losses at that time. If you bought it, let's say you timed your call wrong, and you still aren't making. Let's say you're down now. Let's say you were down 40%. Now you're only down 10%, and you're hitting a volatility zone. You're obliged to either cut your losses there or add protection on there to absorb even further losses if we sell down into the 31st, and be aware of the potential of us selling down in the 31st. Like, so you have to calculate what the risk you're going to take on, where to cut your losses, where to roll out for better positioning. So I can't make those decisions for you, but that is a good question. For myself, I'm looking for an update on Monday. If I don't find an update on Monday, I'm going to either be adding to my position all the way down. I'll add to my positions all the way down to 45.50, I think it is. I'll have the exact numbers for you today. I think that's where the deepest we can go right now is. I don't think we go that deep. That's not even our call wall. 4,600 is our call wall, or our put wall. Just so you know, 4,600 is our put wall. For you to break through that 4,600 down to 4,500, it's going to take a concerted effort by a lot of banks the next few days into Monday, Tuesday. Their best chance of doing it is during a liquid market, so they could attempt to do it in the overnight into the open tomorrow. But even if they did it into the overnight to the open tomorrow, my expectation would be that we are going to slingshot up. If we went to 45.50 at the open tomorrow, there's a 70 to 80% chance you would see a 140 to 160 point day right off the bell. Right off the bell, you'd see a squeeze like you haven't seen. We've seen these already. We've already seen these days where you see those squeezes. When we sell down like that, and in liquid movements down to those walls, especially one that deep, you would see a reaction. You would see an automatic algo buy that'll blow people's asses out. That's why I don't see 4,500 on Monday. It's possible. Anything's possible. But if we do see it, I'm an all-in buyer. I would put my whole account on FDs that day. My entire account. I would risk the entire thing, hands down, without a doubt. Put wall means likely to break below. Yep. Yeah, thanks for being here, guys. Blood Stunt, Brandon, Chase, Adam, whoever's still handling this research, Little Big Bear, Tegan. I don't want you, any bears out there, I don't want you to think that I hate you at all. I know that I shit post often on Twitter making fun of bears. I was a bear for a long time, so don't think I hate you guys. I want you guys to win and always make money. The market does go up and down. I take short all the time, so don't think I don't trade short. I just don't like, or I feel my problem with I have the same problem with market crash bears that I have with FOMO bulls. They lose people money, and I never like to see that. And we can trade down into the end of the year. I mean, we can trade down into next year, but it's always going to go up and down as we go down. It's always going to go up and down as we go up. So that's the trap, is that you get overly bearish or overly bullish. Yeah, thanks for being here, guys. Ever consider Twitter Spaces? Yeah. I was thinking about a very small Discord or a Twitter Spaces. I don't know which one. I don't know if you guys are interested in that. It'd be nice. What's nice about having a very small Discord, like one channel, is that you guys can discuss as a group where you think we're going. Let's say you guys are all in there and you have the bear and bull perspective for where the general market's going, the SPY or NQ or IWM. Yeah, ebb and flow, absolutely. And even if you take different sides of the trade, at least you could be, hey, I'm making money doing this. You guys should cut where you're at and go into this. We could discuss that. But if you guys don't care for that stuff, or if you're in other Discords, I don't need to be cluttering up Discords or Spaces. It's more about getting this what I like about that handle is that I can try to get the live information to you as it happens, and then let you guys know what I'm trading. And then what I really like to do is just put a trading class out there so that all you guys can. You don't have to trade like me either. You can just nitpick things that I do to win, but I'm still here. And That's important for you to understand, is that a lot of traders, a lot of investors, they come and they go. They get burned. They get burned being too bullish. They get burned being too bearish. Most of the guys that make it in this market, or women, whomever, make it in this market, are flexible. They tend to buy investors that buy when things are low and have a breadth to what they buy, tend to make money and never really blow their accounts out. Traders, same thing, be able to flip on a dime to a different perspective. Yeah, absolutely. Being bisexual in the market, even if Adam makes a good point. Even if you can't take on a bull trade or a bear trade, being able to know that the market is trend is changing so that you at least don't trade is good enough. You don't have to trade both sides. But being bisexual in the market, as Adam is saying, still works if you at least only take that one trade for that move, rather than being committed all in. It's so dangerous. I mean, and then you got, like, look, let's just say, like, we can do this for the bulls too. But let's say you're a bear and you're like, well, it doesn't matter what happens down here as long as I hold it to my ultimate price target. It's the time exposure that you're in here as well where you can get burned. So let's say you started to short Airbnb from the top, right? Let's say you grabbed your short up here, and you're just gonna hold it. We know that it's worked here on Airbnb because time has passed. But we also know oftentimes, this is a prime example right here, this is a fake out to shorts. You get trapped in here and you capitulate, and it usually, most of the time, we continue to go up. Now we are seasonally short right now, and especially in this trade, that there's a pretty good chance it's going to happen here with Airbnb, but we know, because we see hedge funds blow up all the time from taking a short, but being short consistently over time. Just saying, well, I don't care about these moves right here. I don't care about this move up as long as I stay on this resistance. I'm good to go. It's always better for you to take these shorts, right? Remove them, let them come back up and hit resistance, then take them again. And you can see that. This is the same for the SPY. You trade the same way as a bear in the SPY. You're looking for these hard bounces. Take another short up here. We didn't break above, right? You could put a small call hedge wall up here to protect your shorts. You guys do it. There's many different ways of doing this stuff. You can sell calls. You can sell puts. You don't always have to be buying. But I want you guys to take more care in the risk that you're putting on for established supports and resistances. Yeah, guys. Hope you guys all have a great rest of your Sunday. Look forward to me putting a video out later this afternoon or early this evening. I hope that I need to take a break and spend some time with my dogs today. I got to take them for a walk. And I will have a short video for you for your trading day tomorrow. I hope you all have a great holiday. If you don't have family and I'm on Twitter and you want someone to just talk to, just say, hey, Cap, I need someone to talk to. I don't mind talking to any of you guys out there for a little bit, especially if you're lonely. I know COVID sucked for a lot of people. Whether you believe it or not, you know that it's been tough out there for everybody. Even people that are anti-mask. Nothing's the same. I was watching a video this week. I was looking at some videos of large events, like parades, like 4th of July parades, all these events, the Christmas events out in the public, and it's bizarre in a way to see that we don't do that stuff right now. That we don't, even when we're holding those events still right now, but they're just not the same. And it bothered me. I was really bothered by that. There's like a fabric part of our country, and I'm a masker. I'm pro-vaccine and mask. I don't bring that in my politics into trading, but even with that being that person, I was heartbroken watching that stuff, because there's a part of there's a trade-off to how long we lock down, and I'm not down for lockdowns anymore. I did my part. I did it for almost 2 years, and I won't lock down again, personally. And then seeing that we're starting to lose what kind of makes us who we are. Lonely trader in it. Right on. Happy holidays to you and your shipmates. Right on, Adam. Hope you all have a great holiday. Love your families. Hold the ones that are closest to you. Keep them closer to you. I'm getting older, so I want you to know that the people that are in your life most of the time, they become more and more important as you get older. So keep them close. Yeah, Melio, no worries. You guys all have a great holiday. I will go live this week as well. I'll keep adding tickers. Every Sunday, we'll start adding tickers. You know what, guys? Don't have to worry about tickers right now. We're going to start every Sunday. We're going to start building a database. I'll share this database with you, and you'll start to have all of these tickers charted out for you. You can always go back and see where we actually are, where we expected it to go. I'll put some bear tickers out there. Remind me next weekend on Sunday. I'm going to also show you guys how to look for stocks to short. So if any of you bears are out there, I will show you guys how to identify stocks that are ready to get whacked. Not the ones that retail talk about. We're going to talk about the ones where it's time to take profit and a bank's doing it and it's nice and mellow. It just goes down nice and slowly. No whammies from retail jumping in. No goofy news coming out. Okay? So matter of fact, next week I'll have a stack of tickers on both sides. Well, I've made this video now, so I'm not going to go back into how to do this stuff. I'm just going to go in and chart them out. We'll rapid fire them out next Sunday. I'll make sure that I have some bear tickers and then I have some bull tickers, and we'll start building this database. I'll share this. I'm going to share an invite with you on my handle so you guys have access to these charts. I can share them to you, and we'll start to streamline this process. Every Sunday you'll get stocks. You'll get a daily brief whenever they're required. That's a recorded daily brief. That's just the indexes. And then I'll come live on with you at key pivots throughout the week. And so that should be enough to get started. And in the background, I am right now currently creating a video series to learn how to trade. Learn how to trade stocks, options. I don't deal with crypto. I can, if you want to, do some crypto videos. I can at least touch on crypto or oil and gas. I didn't get to oil and gas and gold today and precious metals. I want to. If you guys want at least just basic updates every week, I can probably do that once a week for you. Maybe tonight's video if you want them. I love the ride down almost as much as the ride up. Yeah, absolutely. Ride down's good. I like the ride down. If you're a buyer, let's say you like a stock. If I like Tesla, I would love to own Tesla at 750. That makes me excited. I don't understand why anybody wouldn't like owning Tesla at 750. That blows my mind. When you say Tesla at 2200, I believe that. But if there was a moment where I could buy a Tesla at 750, all in. All in. All in all day long. All right, guys. I'll see you soon. Have a great rest of your Sunday.